Ed, talk to me about the story behind these numbers.
Yeah, slightly rainy day at the Bank of England, but they have delivered, I guess, for mortgage payers and to some extent for Rachel Reeves, we'll get to that in a sec, some Christmas cheer. A lot of people had expected that they were going to cut interest rates, and so this is obviously the big news today. If you have a mortgage, particularly if you have a floating rate mortgage, that will go down by 0.25% to 3.25% as a result of this decision, so down from 4 to 3.75%. And that was more or less expected. So most economists thought they were going to do that. They have delivered it. There was always a kind of question mark over whether what the vote was going to be. So how many of the members of the 9-member Monetary Policy Committee were going to go for lower interest rates? In the event, it's 5 of them, so 5-4. It's a relatively tight vote, and a lot of people will look at that and say, does that necessarily mean you're going to have many cuts in the future? Right now, out there in the marketplace, here in the City of London, the expectation is that interest rates are going to go down. Remember, they were up above 5%, so they're currently 3.75%. They're probably going to go down, according to investors, by another 0.25% in the spring, and then maybe another 0.25% after that. So you're talking about 3.5%, maybe 3.25% towards the end of next year. But I think the Christmas cheer for the Chancellor, and you just heard the statement from her a moment ago, the Christmas cheer for her is that the bank has looked at the budget and they've said, as a result of the various measures, particularly the energy price measures, so £200 off your energy bill, and also fuel duty being frozen, as a result of all of that, you're going to have slightly lower inflation in the next few months than would otherwise have been the case. And critically, that means you've got 2% inflation, which is close to the Bank of England's target, by next spring. So put all of that together, and notwithstanding the conditions here, I think it's a rosier picture for the economy than people had expected. Still lots of issues out there, lots of concerns about what happens with inflation, lots of concerns about what happens with growth, and growth is pretty weak right now. The bank thinks it's going to be basically 0% this quarter that we're in at the moment. But leave all of that aside, and as Christmas cheer news goes, this is a kind of what I think most people were hoping for, particularly if you've got a mortgage. Like I say, floating rate mortgages, you'll see that reflected in the coming weeks. The interest rates have come down from 4% to 3.75%.
So, Ed, what's your hunch then? Is this a genuine turning point or a token move?
I think so. The interesting thing about kind of where we are at the moment. So interest rates. The bank thinks the rates are going to come down again, and we heard from the governor, and we'll kind of hear from him a little bit more this afternoon. In his quote that kind of came out alongside the minutes, he was saying, "We do think that rates are still heading down. So they are heading down." But we're getting to the point now where it's becoming more finely balanced. In other words, they're no longer going down quickly, they're going down more slowly now, and they're getting closer to the point, this kind of curious point about where they might be seen as neutral. So whether that's 3%, whether it's 3.5%, whether it's even higher than that, or indeed lower, that's a matter of debate. But the point is, we're getting closer to that point that most economists at the bank think is the kind of neutral point, where they're no longer... If you think about what they've been doing for the last kind of 2-3 years, they've been putting their foot on the economic brake. Raising interest rates is like kind of putting your foot on the brake. What they're doing now is they're taking their foot off the brake, and then anything else, is the kind of accelerator. But right now, it does. The point that we're at the moment is they are kind of lifting their foot off the brake right now. And they're not quite sure at what point neutral interest rates are, but they're getting close to them.
Ed, the vote too, like you said, 5-4 to cut. Andrew Bailey, the only member to change their vote. What does this suggest?
Well, it suggests that this is a tighter... I think my first instinct, and so what happens when these meetings happen, we go in and we have a briefing inside the Bank of England in the kind of down below with no phone reception for obvious reasons. And actually my first instinct when I saw the minutes, and that's the main thing we get today, we get the detail of the decision, we get the minutes, which is kind of what various different members thought and what they were aiming for. And when I saw the minutes and I saw that it was 5-4, I thought, well, this is kind of a tighter thing than we expected, and we'll have to see. But I think in the coming months, I think the question is, how many of those other members are going to move their decision? And right now, it could well be that you have other members. There's one of them called Catherine Mann. She says that right this time she voted actually to leave interest rates on hold, so she didn't vote for a cut, but it was finally banned. So she could decide she wants to go for cuts. And I suppose my instinct is that it's relatively unsure how soon the next cut is going to be. But right now, most markets kind of think it's going to be in the spring. So if you're kind of waiting and you're kind of looking and thinking, okay, so when are mortgage rates going to go down again? At the moment, most investors think it's going to be kind of the spring, maybe by May, maybe a tiny bit earlier, maybe in April. And as for when the following cut is, if there is a following cut, we'll have to see. But I think the thing that makes this a kind of different decision to the normal one. So normally when I'm standing outside the bank, and hopefully normally the weather is better than this. Normally, we don't just have a decision and minutes, we get the bank's latest set of forecasts as well. And we don't have that this time around because it's not that one of those kind of quarterly meetings. We'll get that again in February. So February is the next month to be keeping an eye out for. That's when we get the full assessment for the bank about what they think the economy is doing and where they think inflation is going.
OK, for now, Ed, thanks so much. Ed Conway there, outside the Bank of England in central London.